Business has always been about turning a profit, making money. But can it stand for something more? Something beyond dollars and cents? We think so. We think that today, business has a higher calling, a purpose to be fair and just, to do right by their workers, customers, communities, and the environment. And it turns out companies successful doing that also do better for their bottom line. When you see the Just Capital seal, it means this company is a force for good. Visit justcapital.com to learn more.
Good afternoon. We're doing it live right here, Mottek On Money on 790 KBC at 4 in the afternoon. Live on the air, streaming live online too at kbc.com, and you're on demand. Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Well, a mixed start to the new week on Wall Street as investors await the latest reading on the Main Street economy, and that will be the key inflation reading, which will be coming out this week, which could help the Fed decide the timing of any key interest rate cuts. The Dow did come in for a closing gain today of 47 points. The S&P 500 slipped 6, and the NASDAQ gave back 66 points. All of the major averages hovering near the recent all-time highs. We did see the S&P 500 up 7% so far this year, 33% over the last 52 weeks, and recently hit an all-time high. Taking a look at what's happening with the price of gold, it too has been touching record highs, right now hovering at just below $2,190 an ounce. Bitcoin reaching for the stars, moving above $72,000 today. Looks like former President Trump likes cryptos, and that apparently gave Bitcoin a lift today, up more than 400 right now to around 72,457. Taking a look at what's happening here with Reddit. This is a company that plans to offer 22 million shares at a price range of $31 to $34 per share, and that social media platform's closely watched initial public offering. They plan to raise up to $748 million and list on the New York Stock Exchange under the ticker symbol RDDT, according to a filing today. Yeah, President Trump speaking favorably about Bitcoin and cryptocurrencies. He's appeared on the CNBC this morning. He was also asked if he bought Bitcoin himself. He replied that he had not, but he said he sometimes lets people pay with Bitcoin or other crazy new currencies. That's what I call them, he said, new currencies. We did see Bitcoin get a lift on this. Ethereum and some of the other coins also moved higher today. We'll take a closer look at that here coming up very shortly. Price of oil, meanwhile, it's been ticking higher lately with all the upheaval in the Middle East. Right now, oil is up about 15 cents, 78.08 a barrel, hitting recent highs for the year. We see Brent crude in London, the international benchmark, right now above $81 a barrel. Shares of Boeing in the spotlight, moving lower today following a report in the Wall Street Journal that said the Department of Justice has now launched a criminal investigation into the company. This as Boeing deals with lingering headwinds stemming from a safety incident involving an Alaska Airlines flight back in January. Meanwhile, a former Boeing employee known for raising concerns about the firm's production standards has been found dead. John Barnett worked for Boeing for 32 years until his retirement about 6-7 years ago now. In the days before his death, he had been reportedly giving evidence in a whistleblower lawsuit against the company. Boeing has released a statement saying it was saddened to hear of Mr. Barnett's passing. The 62-year-old reportedly died from a self-inflicted wound on March 9th, and police are investigating back east. Big night, of course. Last night, Hollywood's biggest night, with the Hollywood Awards season coming to a close with Oppenheimer taking home 7 awards, including Best Picture, Directing, Actor in a Leading Role, Actor in a Supporting Role, Cinematography, Film Editing, and Original Score. And it looks like Universal Studios were the biggest winner during last night's Oscar ceremony. Coming up later this hour, we'll get an update on commercial real estate with Jerry Sullivan, National Managing Editor, The Real Deal Commercial Real Estate News Source. The final vote count is not in yet following last Tuesday's California primary, but right now California's Prop 1 is leading by a nose, and if that's passed, it'll be part of the $6.5 billion bond would go to 11,000 homes here in California. This is what was pushed by Governor Newsom. Prop 1 being promoted as a mental health bond measure that would provide $2 billion to build housing. The final vote count not expected for days, possibly weeks, and could potentially impact commercial as well as residential real estate. I'll discuss that with Jerry Sullivan coming up. Also later this hour, I'll talk business with Mark Wilbur, former CEO and current chairman of Employers Group, former chair and founding member of BizFed, former associate dean of the USC Marshall School of Business. Mark Wilbur will be joining us live later this hour. But first, a lot going on your money, the markets, and the economy. And joining us live now is Gabriel Wisdom, Managing Director at American Money Management and author of Wisdom on Value Investing. Gabriel, thank you very much for coming to the line here. Mixed start to the new week. Bitcoin at a record high, gold at or near record highs here. The overall market still at or near record highs. Give us your view of things here at the moment.
Well, right now, Frank, everybody is going to be focused on the consumer price index number to be released tomorrow, Tuesday morning, very early Pacific time, 8:30 a.m. Eastern time. Very important number because January's inflation reading was considered quite hot, meaning that inflation was higher than the Federal Reserve wanted to see. And given the hot January CPI, and we had a lot of people calling the top of this stock market rally, the end of it, on the January numbers, some are suggesting that the Federal Reserve will not cut interest rates at all in 2024 because the economy is too strong and inflation is reaccelerating. So the big question tomorrow is going to be, what does the consumer price index indicate about the strength of the economy? It appears that most of the inflation is coming from shelter and auto insurance. I mean, that's where the big surges have been, and some are expecting improvements there. Generally, it's like it's darkest before the dawn. There's a great deal of pessimism before the market breaks higher, usually.
On the air live with Gabriel Wisdom with American Money Management. On Friday, we got the big enchilada of monthly economic reports, the jobs report from the Labor Department, which showed hiring still coming in better than expected, but the nation's unemployment rate did tick higher and is now the highest seen in a couple of years. So the Fed also watches that reading as well as inflation. What do you think is going to happen tomorrow?
Well, I think that inflation is still very much with us. I expect a reasonably hot consumer price index number, honestly. I know that Chairman Powell of the Federal Reserve is sounding somewhat dovish. He was talking about how rates would likely come down at some point in time this year. But, I think he's just peddling some optimism. Higher for longer is really the sentiment among most of the members of the Federal Open Market Committee. For example, Raphael Bostic, who's the president of the Atlanta Fed, said that, well, he warned really that there's a pent-up exuberance in financial and economic models. He acknowledged that inflation has slowed, but he said he fears that it could accelerate quickly if the Fed stops tapping on the economy's brakes and begins to step on the accelerator, as he said.
Very interesting. Raphael Bostic, a familiar name on this program and to Southern Californians since he was a professor at USC, and we used to have him on the air during the financial crisis. He ascended to become the president of the Atlanta Federal Reserve, as you know, and is frequently quoted in the financial press these days. So always great to hear his name. He's part of the home team here. And what about what we're seeing in commodities? Bitcoin hitting record highs, gold at or near record highs. All this, as we're told, inflation is supposedly easing.
You know, it's funny, Frank. The central banks are buying gold, and that's why it's been going up. We're going into the more enthusiastic gold buying season in India, which represents a large part of the market for jewelry and weddings, and all the wedding gifts from relatives generally contain some gold. And then on the crypto side, we've got the April halving, which is going to reduce the supply of Bitcoin. It's now going to cost about $30,000 to mine one Bitcoin, according to one analysis that I saw, trying to handicap what the intrinsic value for Bitcoin is, and it seems like about $35,000 is the number. So it's priced for everything going right. We heard former President Trump speak favorably about cryptos. I mean, that's a positive, certainly in terms of for a certain crowd. Gary Gensler, who's the chair of the SEC, did offer some new warnings about cryptos. He said in an interview with Yahoo Finance that the whole field is rife with abuses and fraud. And he said that investors should be aware that Bitcoin is a highly speculative, volatile underlying asset. And we know the SEC is suing Coinbase and Binance, the two big cryptocurrency exchanges. But the big issue is this long-awaited climate risk disclosure set of rules that the SEC has approved earlier in last week. The rules require companies to disclose climate emissions, and we know that cryptos take a lot of energy.
On there live with Gabriel Wisdom. In the meantime, Bitcoin investors are having or halving a ball in the meantime here as Bitcoin continues to hit record highs. And of course, as you well know, Gabriel Wisdom, we talk to the biggest fans of crypto here as well as the harshest critics. And valuation on this is certainly something that I always ask about. And what do you turn to for any reliable analysis or I think it was certainly Warren Buffett has been a critic of Bitcoin and other cryptos, and trying to understand it and trying to value it is still a challenge. But how do you go about valuing it and assessing it and analyzing it?
It's very hard to value Bitcoin on a fundamental basis. I think the cost to mine one Bitcoin at $30,000 is a base case valuation, and then if you add a premium of say 20 or 30%, that takes you somewhere between $40,000 per Bitcoin would be probably a reasonable price given the trend. But the price is the price. It's above $70,000 per Bitcoin, and crypto is very real. When I look at for other commodities like oil, for example, that we pretty much all of us use, the break-even point in the Permian Basin is about $40 per barrel. That's the oil price that's needed to generate a small operating profit. $40 a barrel of oil's trading not quite double that. So maybe the right price for crypto or for Bitcoin is where it is now.
Very interesting. And you mentioned $40 a barrel. I remember when it went negative $40 a barrel during the pandemic in the first year in 2020, when the whole global economy was at a standstill. Oil prices actually dipped to below zero and went negative $40 a barrel. So it has seen a tremendous rebound. Obviously, now with the upheaval in the Middle East, oil prices back in focus, hovering near $80 a barrel. In fact, even higher than that for Brent crude in London. And gas prices, by the way, have been edging higher here in Southern California. You might have noticed about 20 cents a gallon higher than where they were just a month ago. And I had a car wash for the first time in months over the weekend, and you've seen the price of a car wash lately, up around $25 at one of what had been a budget place where I used to get it for $10 maybe. So everything does seem to be going up. What about the price of energy, Gabriel Wisdom, and might that be reflected in the consumer price index we'll be getting tomorrow morning, as we've seen gas prices rise recently as the price of oil has shot higher again?
Frank, I wouldn't be surprised. The United States is clearly at risk of running short of power because of electricity-hungry data centers and clean technology factories, and add to that crypto and, of course, artificial intelligence, which requires all these data centers, and there's cloud computing. Anyway, the utilities now are saying in the next decade they're going to need 17 times more energy than they currently produce at the current rate at which all these technologies are expanding. So that's there's the future. Now, can we predict the future? No, we cannot. So we do know that in the here and now, Yemen's port city has been under attack. We know that many ships are now making the longer, more expensive trip around Africa's Cape of Good Hope to avoid the dangerous routes through the Gulf of Aden and the Red Sea and the Suez Canal, and that's raising shipping costs. This is very real inflation, at least. If at the very best case, it would be transitory, but it's certainly very real in the here and now.
All right, let's get to some of the exciting stuff here. The so-called Magnificent Seven, or now I guess we're down to the Magnificent One. That's NVIDIA, which is hovering at around $8.58 a share here after pulling back today. What are your thoughts about NVIDIA and the other big names here?
Well, they're in a corrective phase right now, with the exception of NVIDIA. It still remains pretty hot. My favorite would be Apple. It's certainly fallen, but the shine is not off of Apple. They announced that they're backing away from car manufacturing or a smart car design, which I thought was very smart. Meta has been a little bit soft, but this is also an AI and all things futuristic kind of scenario. Amazon remains the top retailer in the world, this part of the world anyway. So in my feeling is that you could buy these kinds of companies on the dips. The market rally that we're seeing, you mentioned the S&P 500 is up so dramatically over the trailing 12 months and up, I think you said 7% year to date. That's about what I believe. It's occurring because of a broadening of interest in or a better breadth in the market. It's not just 7 companies anymore. It's the small caps. It's financials and the industrials. It's the drug companies, the Ozempic-related drugs especially. So it's a broad market participation we're seeing.
All right. At this point, Gabriel Wisdom, any specific places where you are putting money now and or taking it off the table?
Frank, the average internal combustion engine car that's manufactured today has anywhere from 1,400 to 1,500 semiconductor chips in it. And the average electric vehicle has over 3,000 semiconductor chips. And this is only going to get bigger. The semiconductor chip thing was, you mentioned that oil had a negative value during the COVID downturn. Semiconductors have been underappreciated for a very long time. Now NVIDIA and a number of other companies are hot again, but semiconductors are a very important resource. My favorite in this area, something I do currently own, is ASML, because they're a picks and axes provider. Semiconductors, the U.S. has already passed legislation limiting China's access to certain semiconductors and chip-making equipment. ASML has managed to provide the basics, which China will buy, even though they can't import the chips. So I like a company like this. I think it's underpriced, honestly.
All right, terrific. Gabriel Wisdom, Managing Director at American Money Management and author of Wisdom on Value Investing. Always great to have you with us here, Gabriel. Have a great week and look forward to speaking with you again very soon.
Thank you, Frank.
All right, and let's get right out to the freeways here on 790 KABC. Friends, if you're hurt in an accident, you need an experienced advocate, and Clark Fielding and his team of sharks at Fielding Law are on standby, ready to dive into your case. My friend Clark the Shark is fearless for justice and your go-to attorney when injured in an accident that was not your fault. Whether it's a car accident, slip, trip, fall, or any kind of other personal injury, Fielding Law is here to make sure you get the care, attention, and compensation you deserve. Fielding Law can assess the circumstances of the case, negotiate tenaciously with the insurance companies, and if needed, file a lawsuit and litigate to seek fair compensation on behalf of you, the injured party. An injury is a major disruption in your life. Medical expenses, lost wages, pain and suffering, property damage, and other losses incurred as a result of that injury are part of the damages. Don't try and handle the process alone. You need an expert in the process, and the team at Fielding Law are the ones to trust. Put Clark Fielding's number in your phone under the word accident. 833-88-SHARK. That's 833-88-SHARK, or go to clarkthesharklaw.com. Mottek On Money continues here in 790 KABC. Mixed start to the new week on Wall Street. The Dow coming in for a closing gain of 47 points at 38,770. The S&P 500 gave back 6 at 5,118, and the NASDAQ down 66 at 16,019. Boeing shares down $6 today to $192 and change. Following a report in the Wall Street Journal, it said the Justice Department has now launched a criminal investigation into the company as Boeing continues to deal with lingering headwinds stemming from a safety incident involving an Alaska Airlines flight back in January when a door came off. Taking a look at the yield in the 10-year note, it's at 4.10%. Gold touching record highs, just below $2,200 an ounce, right now hovering at around $2,187.50 an ounce. We see oil at 15 cents at 78.08 a barrel. Bitcoin at record highs today, moving above 72,000, up about 400 now at 72,457. Ethereum of 37, above 4,000 at 4,068, and Doge at the moment at 18 cents. NVIDIA shares pulling back 17 and change today to 857.74. Apple up 2 and change to 172.75. And Amazon pulling back more than $3 at 171.96. And now the latest news for you right here on 790 KABC. Mottek On Money continues here on 790 KABC. The votes are still being counted following last Tuesday's election here in California, and Prop 1 is a cliffhanger. Final vote count still not in following last Tuesday's California primary, but right now, California's Prop 1 is leading by a nose at last check. The passed part of the $6.5 billion bond would go to what we're told will be 11,000 housing units. The government said the initiative would create about 11,000 new homes through new housing construction or by converting hotels, and other buildings into homes. This is what was pushed by Governor Newsom, being promoted as part of a mental health bond measure that would provide $2 billion to build housing. Now, the final vote count on this is not expected for days, possibly weeks. All of this being watched very carefully in the commercial real estate business. And joining us live now is Jerry Sullivan, National Managing Editor of the Real Deal Commercial Real Estate News Source. Jerry, thank you very much for taking the call here. Obviously, this would be a big deal here if this goes through. Give us an update on how the commercial real estate folks see this big Prop 1.
Well, I think, this whole thing is a lot more questions than answers, and, largely based on prior performance by public agencies when it comes to using public funds to develop housing. There hasn't been a lot of success. We've been down this road a number of times. We went through Prop HHH in the city of Los Angeles back in 2016, have yet to see really much action out of that. And now, again, here we are on another big statewide bond. And, I just think that I don't know that anybody believes that any of these will accomplish what they are setting out to, or at least what they claim to be ready to do.
I know you have great experience here in the Los Angeles area, former editor of the LA Business Journal and OC Business Journal, and I know you've been following what's happening in commercial real estate as well as the overall economy. So you've seen firsthand some of these misfires here with purchase of industrial properties downtown for homeless purposes, and it just it didn't work out, right?
Yeah, I mean, there's no doubt there's been all sorts of problems in the whole process that this has gone through at the city level. Now, of course, this is a state program, and so let's see how that might turn out if it indeed passes. But I don't know that anybody has great confidence. Prop HHH raised $1.2 billion, and that was in 2016. They yet to deliver the number of units that they said they would. The costs have come in just way over estimation. At one point, the average cost of these units was $600,000, and that's for a unit, not a single-family home. In the meantime, the average cost for a single-family home in Bakersfield or Kern County is $370,000. So there's not a lot that's making sense about how these programs are rolling out.
Right. Did anyone tell them in Sacramento that it's expensive to convert office buildings into condos or apartments, right? Certainly a lot of taxpayer money would potentially be on the line here to do all this, to convert hotels, motels, and other buildings into housing units. A lot of talk about this now, obviously, the push to find more affordable housing and office space still being a lot of vacancies out there, especially in downtown LA. What is the latest buzz in the commercial real estate business about these conversions?
Well, conversions, again, not as easy as everyone might think, and it sounds very simple. We need housing. We have too much office, so why not just switch use? Not always that easy. A lot of buildings have to be cored out in order to give air and light to all the units. Very expensive. And as far as, this ballot measure, the statewide ballot measure, there has been talk of, direct conversions of motels into housing, and that makes sense. A motel is a form of housing, and of course, to make it permanent, it requires some adjustments. But you can see that I've not heard too many people talk about the likelihood of these funds going to office to resi conversions. But I will tell you, I'm sure people in the office market would welcome just about any sort of ideas that might begin to sop up some of the excess space in the office segment these days.
All right, we've been talking about this for years, Jerry, but what's now known as graffiti towers right there in the heart of downtown Los Angeles, supposedly being sealed off now so that more vandals can't get in there, or people jumping off those towers can't get in there. What's the very latest on that project?
Not much, Frank. It's this thing is stuck in the mud, and it's got a developer behind it that is all but bankrupt, and it's based over in China. It's shed most of its U.S. stuff. I don't know that anybody's been in contact with the owner lately, and I guess fencing it off so it can't be vandalized is one thing. Finishing it so it's not an eyesore, an incomplete sort of broken tooth on your skyline is another thing altogether. And I don't know that anybody's anywhere near an idea that might get that project finished.
All right, we've been hearing about that slow return to the office. It seems like business is picking up. So I was talking to an attorney today. Looks like legal work certainly has picked up. Certainly, in that case, there was a demand for more office space. But give us an update on how the office situation is looking here in the downtown Los Angeles area.
Well, downtown, I think, is still a very tough market. I think vacancy rates are running around 25%. You have some Class A office space that's gone on the sales block at real discount prices. I think you're getting to around $150 a square foot. As we reported last time we spoke, we believe it's about at a bottom. So I mean that's something, but it's way down from peak, and I don't see it getting back up for a while. And to be honest, I don't know that. I think there's going to have to be some teardowns in the downtown market before all is said and done. Meanwhile, there's some bright spots. Century City's going great guns, and some other markets with Class A office. But downtown LA, I think it's going to be rough for a while there.
All right. What about any other bright spots? What about industrial e-commerce? Big, right? Especially in the Inland Empire.
Well, that's really cool, though. And the good news there, it's cool. It's not dropping. I mean, there was a time when people were throwing up 500,000 square feet of space on spec, and they were almost certain to have it leased before they were done building it. And that was a strong market before the pandemic. And then, after an initial jolt when just about everything stopped in the pandemic, when that digital trend became clear and it put that great emphasis on logistics, it really zoomed. At one point, industrial vacancy rates, I think, were under 2% region, Southern California wide, and almost zero in the Inland Empire, which is a place with the rail links and freeway links is ideal for a lot of distribution. So, but that has cooled, and I think, it's cool it's become more sensible now. I think industrial is cooled to the point where, okay, it's become a more normal market rather than red hot. But, we'll see where it goes from here.
All right. And retail and the malls, see more for lease signs up. Give us an update on the retail world.
Well, the malls, retail actually in a lot of ways is it's stronger than office, which, I think if you said that in 2018, that in 6 years retail will be stronger than office, people would have thought you were crazy. But yeah, it does seem to be. Now, one of the reasons, though, and I think everyone should be cautious, is I think we're beginning to factor out a lot of big malls. And you can go around Southern California and see, old regional malls that are pretty much done for, and in the process of being redeveloped, in the process of just kind of wasting away as retail centers, losing tenant after tenant after tenant. And so, when you take them out of the mix and they're no longer, a lot of them are just not viable options. Okay, then the remaining retail is doing well. The truth is, you still do have all that vacant property. I think we've just begun to stop considering because we're all seeing it as an eventual redevelopment as housing or education or some other use.
Jerry, thanks very much for taking the call and hitting on all this this afternoon. That is Jerry Sullivan, National Managing Editor of The Real Deal, commercial real estate news source, authoritative source. Jerry, thanks very much, and I look forward to your next update.
Thank you, Frank, and take care. We'll speak next time.
Terrific, Jerry. Thank you very much, and let's get right out to the freeways now on 790 KBC. Mottek On Money continues here on 790 KBC. Good afternoon. We are doing it live here in the 4 o'clock hour. Yep, it is the 4 o'clock hour in case you forgot to set your clocks. Spring forward time, 1 hour. So it is now 4:49 here in the afternoon. Mottek On Money, we are doing it live in the 4 o'clock hour and doing more in 2024. Live on the air here in 790 KBC in the 4 o'clock hour, streaming live online worldwide at kbc.com and the on-demand Mottek On Money podcast at kbc.com, Apple, iTunes, and all of your favorite podcast platforms. We did see a mixed start to the new week on Wall Street with the Dow of 47 points, 38,770. The S&P 500 slipping 6 at 5,118. And the NASDAQ down 66 points at 16,019. Boeing stock taking a hit today, down $6 at 192 and change. According to the Wall Street Journal, Boeing is being investigated following that blowout of a door on an Alaska Airlines flight last month. The price of oil moving higher, up 15 cents at $78.08 a barrel. The yield in the 10-year note now, which impacts the fixed-rate mortgage rates, at 4.10%. Tomorrow we'll get another important reading on the economy. That'll be the Consumer Price Index. It should be noted gas prices have been rising lately here in the Los Angeles area as well as elsewhere as oil prices have been moving up following the upheaval in the Middle East. We see gas prices here in L.A. about 20 cents a gallon higher than where they were just a month ago. Taking a look at Apple shares, it rebounded today by a couple of bucks, 172 and change. NVIDIA, which has been on a tear, hitting record highs until now, down about $17 at $857 and change. Amazon down more than 3 at 171.96. Should be noted, Bitcoin hitting a record high today of more than $400 to $72,457. We're watching Bitcoin pop to all-time highs. Ethereum up about 30 now at 4,068. And we're looking at Doge at the moment at 18 cents. Taking a look at the price of gold, it too has been hitting record highs lately. Right now, down about $1 at $2,187.50 an ounce. Looks like it's been as high as $2,195.23 an ounce. That is the new all-time high for gold. Well, a lot happening on the Wall Street economy. Now let's get to the Main Street economy. And joining us live now is Mark Wilbur, former CEO and current chairman of Employers Group, former chair and founding member of BizFed, former associate dean at the USC Marshall School of Business. Mark, great to have you with us here this afternoon.
Hi, Frank. Great to be on. I miss being on your show more often, but this is great. I'm really happy to hear your voice.
Likewise, Mark. We missed you, and hope all is well. And we had that big jobs report on Friday, and tomorrow we're getting the inflation number. And you have the greatest feel, of course, for what's happening on the Main Street economy. Give us your view of things here at the moment.
Well, what I find interesting right now is this whole surge pricing issue going on with with the restaurants. There's even a Wall Street Journal article about it. I mean, I find this very interesting because,
yes,
imagine all the people that take their lunch at like noon. And, they're kind of expecting that. I'm talking about all the blue collar people, the guys that are drivers, the students out there, all the people that go and grab their lunch at noon. So all these restaurants have been cranking up their prices with inflation. And I get that. And we all get that. But now you're going to hit people on top of that with surge pricing. Wow. I can tell you, Maya Angelou, had a great quote, Frank, and it was, people may not remember exactly what you did, but they'll never forget how you made them feel. And every time I've talked about this surge pricing with people, it really makes them angry because you're kind of messing with a life basic. So in other words, if I get in a car crash and need emergency surgery during rush hour, am I going to pay like double the price on my surgery because it's during rush hour and it was a car crash? Here you need to eat. And so people are now going to, stick you even further during a traditional lunchtime. I don't know, Frank, this one, I feel like I'm sure if you read the Wall Street Journal article, there's an example in there with a barbecue store. That one may sound okay because they have a unique item, but you think about burger places and things like that. I think you're heading for a backlash that you may have trouble getting customers back from. And I think that's why Wendy's turned it down. I mean, they started looking at it, and even the backlash by suggestion was so strong that they dropped it.
That article is titled Surge Pricing Coming to More Menus Near You. Restaurants experiment with technology that can move prices up and down based on demand and staffing. A little sales boost to offset our cost is what is also mentioned there. And as a matter of fact, I was at a restaurant over the weekend where you had to order off of an iPad basically, and then of course decide on a tip right away. I guess tip yourself or somebody in the back there, and then they come out with the food, and then they didn't bring the drinks. Oh, well, you have to get those yourself. And so all of this, of course, addressing the labor situation out there, Mark, because the cost of labor being so high here in Los Angeles. We're seeing more of that too.
Yeah, it's kind of a fascinating moment for that industry because of the situation, of course, with the minimum wage issue for fast food and all the increases that have occurred. Look, this is an interesting time for the people that track economics. Adam Smith's supply and demand curves and all that fun stuff. But the reality is, at the end of the day, people need to eat. They need to drink water. They got to be able to breathe air. They've got to be able to get from point A to point B. Certain life basics. And I understand the surge pricing on Uber and those. I get those because there's not enough cars. And so, it depends on how important it is. But there's other alternatives. And I think the real question is, if I'm a business owner, I need to look at it as, is there a fast replacement for me if I try and do a surge pricing? If you can get away with surge pricing, more power to you. Maybe that barbecue store in that article can get away with it. But I think there's some economic issues that they're going to face if they do that.
Well, we're going to have a surge of more conversations here with you, Mark. So wish we had more time. We'll have to stop there, but let's do it again soon. Mark Wilbur, former CEO and current chairman of Employers Group, former chair and founding member of BizFed, the Los Angeles Business Federation, former associate dean at the USC Marshall School of Business, live with us here on Mottek On Money on 790 KABC.
The Ed Milet Show showcases the greatest peak performers sharing their journey, knowledge, and thought leadership.
This is one of the all-time best pieces of advice ever given on the show.
Actor Rainn Wilson.
The number one thing that psychologists point to with young people of why they are struggling so much in this mental health epidemic is they don't have resilience. So how do you build resilience if you don't understand suffering itself?
The Ed Milet Show is available on YouTube or wherever you listen.